Good evening, KenLongTortoise Capital Nightly Strategy Podcast for October 28th, 2024. We'll start with some sniper trades of the day. This is KRE. This is on 10 minutes. There was a question in the chat room about R5 versus R10. When do we make the change? We made that change a while ago in the the small group coaching cohorts. Here's in a nutshell our thinking on that. That if you're using a 3-minute chart, excuse me, that was a little too large. Yeah, if you're using a 3-minute chart, you can use the R10, which again is you take a range stat and divide that by 10. And so that gives you the R10 is 1/10 of a range stat. And on a 3-minute bar, that's usually enough to get you in. And now you have a very tight stop. But price tends to be a little noisier. So you want to quickly get your stop to no lose. So that's an R10. A lot of guys were finding the 3-minute was too quick and they only had like a span of control of one, maybe two. But if you used a 10-minute chart, you could maybe handle 3 to 5 symbols. And on the 10-minute chart, the R10 is probably too narrow. So what we did was we said, well, let's use an R5, which is 2 R10s. All right. So we're going to call that one an R5. This will be an R10, and that's an R10. And two of those together are R5s, meaning that there's 5 R5s in the range stat, almost drawn to scale. So you have 1, 2, 3, 4, 5. So you have 5 wrist boxes, 5 R5 wrist boxes, and you have 10 R10 wrist boxes in a single range stat. So one is just twice as large as the other. And on the 10-minute bars, what we're finding is that the R5 is a comfortable level of distance off the bottom, and it gives you a wider stop. And you still have 4 units of reward to the upside if it were to make a range stat. So the move from the R10 to the R5 was really just to account for the different time span of the bars, and to allow for more span of control on the intraday trading. All right, so we're looking at the KRE on the 10 minutes. So that blue box is the OR10. Here's the breakout. It fails. I exit when it crosses below the VWAP. So that's minus 0.5. There's a COTA 2 re-entry, same price level, same risk box. That one returns about plus 0.5. So those two cancel out. There's a COTA 2 continuation. And that gives maybe 0.5. So it nets 0.5. So those two cancel probably half an hour. And this was a time series more than anything. We only had, we were in the last half hour and it seemed like it was stabilizing here. So it just took the exit at the skin of the dragon. Now, when the indexes are and the targets are so compressed, the ranges are so compressed that when it's just walking north like that, am I always as precise as I can be? No, As long in this case, as long as I'm better than the PSAR, I'm okay. And just let it drift higher. That was the absence of panic selling there. So you got to adapt to different times, and it's got to make sense to you. Here's MSOS marijuana. There's the OR10. There is the breakout to the upside and an immediate minus 0.7 loss. There's a breakdown below the OR10, and that's where we're going to get short. R10 curls and reverses. I get out like at the far side of the dragon. Would you be wrong getting out here? No, that's fine. It's the same exit, same price level. So that's about an R. Missed the short. So that nets out to about maybe 0.3 for the day on that one. This one is DIA on 10 minutes. Big gap. I probably could have played this as a 3 minute because of the size of the gap. There's your breakout. Quick half an hour loss when it comes below the VWAP. Re-entry. Micro loss. Choppy. Nothing. So minus 0.5. This one is EWZ. Big gap. Probably could have played this one as a 3 minute bar, which would have put a entry right about there. As it was, here's the OR10. There's the OR10 breakout. Scratch and nothing. So micro kind of a day, not much follow through. There were some questions from the chat room. Let's see what I got here. Oh, that's good. Here's Jonathan. There's his OR3. His OR3 breakout. Quick scratch. It rolls over. He takes the short right in the elbow. That's perfect. We talked about that in the room in the coaching tonight. I like this exit to cash 0.48. I love the reentry right at the hook of the elbow of the dragon when that reverses and crosses. I love that entry. Unfortunate, but we did get a little bit of a gain. The reentry was maybe 1 bar late, but I don't mind that. Quick cut. This is the one that got away because you have a high, a lower high, it breaks through the PSAR and the Bollinger Band mean. I'd be willing to try that with a shot down to the VWAP. He does take the CD with a quick cut, and there might have been a micro trade there and a caught 2 here. But this is the one that I like that got away. Still, net positive for the day. Greg asked some questions. Standard plans. Yeah, so this is a special case. I think we talked about that. I thought that night. This is Tesla after a 16% gap up with explosive blowout earnings. This is a turbo trade. There's your OR3. And I was committed to just let that go. as long as it stayed above my stop, I was just willing to let it go and see what happened, because my belief is that this gap blew out anybody that was interested in shorting that. And so the question was, would I get short if it broke below the anytime up in here? If it broke below the low of the day, would I be short? Yeah, because that's now a 16% potential move. And if you just got half of it, 50% retracement, I would go. So that's my initial thinking. How often does Tesla have a 16% earnings gap up blowout? Not very often. So this is a special case of a symbol that I watch every day. And I answered the question about R5s versus R10s earlier. This is the same question. Yeah, in the small group coaching, we worked out the idea that if you were trading 3 minutes, the R10 is okay. The R5 is better if you're using 10-minute or 30-minute bars, so that you have a wider stop and a smaller position size and less active management. If you're doing maybe even at the 30 minutes, you might be using a frog box. If you're using 2 hours or dailies, you could be using a frog box maybe. So we're just trying to tune the size of the standard risk box to the time frame that you're trading. I think that's the same, yeah, same question. Question two. Yeah, Tesla. Yeah, I've already, yeah, I think that's the same question. Oh yeah. So yeah, every excess in them, but no, there's like no selling pressure in here whatsoever. And the characteristic intraday moves of the last month have been very choppy sideways. So you will get a lot of false signals when your trading range is so narrow. So we know that one of the ways we've adapted is just in this case, because of the big gap, just hold my nose and buy. You notice I'm not trying to put second positions on. This could have been a 2 hour battle drill, and that could have been a 2 hour battle drill. I wasn't trying to do any of that. This was a one-time deal with Tesla in a special case on an earnings day. So that's what happens sometimes. But we've been talking about that for hours and hours in the small group coaching. Um, Mondays, Tuesdays, Wednesday nights, and Sunday mornings. Let's look at the daily report. We've seen that snapper trade of the day already. The 150-day look. This has been so choppy for the last 30 days. We have not been seeing lots of follow throughs. There was one period when there was a brief moment, but all this has been very choppy, narrow ranged. We're very near the all time high, waiting for the election. And then there's going to be a big break one way or the other, especially in Tesla. So we're just concentrating on a bird in the hand right now rather than counting on follow throughs. Today was extremely narrow range day. Not surprising at all. And the 10-day, 5-day, and 3-day anchored VWAPs right in there, tight around the close, in the middle of the chop, waiting for the election, as we said. Yeah. Bullish normal, a little bit of a price decay the last couple days. We're just riding the upper limit of the river. Risk Z is back almost to the zero state, just patiently waiting for the market to decide. No signals in the swings. Mixed bag in the Dow. And in the ETFs. Plenty of auto framers firing. The narrow ranges lead to typically very high frog quality numbers. Lots of good setups in the auto framers. And this is a market that is narrowing its volatility, waiting with bated breath to see who wins the election of the century. Look how many squeezes there are. S&P, DIA, XLK, the Qs, Walmart, everything is squeezed tight. So the intraday trading is pretty scarce. McDonald's, Diamonds, Coke, Devon Energy looks interesting to me. I like 3M when it's up 4%, but it's still a 3.3. I like that. I like CVS. It's 6-1 and had a 1.5% gain. McDonald's 5-1 and it was up 1.4. So those are three symbols that could very easily have follow through tomorrow. So when the ranges are so narrow, you have to find more complex storylines to trade. Still being dominated by fall and the summer right now. And very little on the breakouts for today. Palantir, JP Morgan, Tesla, all looking pretty strong. Yeah, not much to choose from. The best trading symbols right now are the ones that are combining, as always, consistency of large daily moves and large daily range percentages on average. So Palantir, Devon, Uranium, Tesla, Clean Energy. Look how tightly and narrow that range of the last 30 days has been. Not much wiggle room. And the regression line slopes are all kind of back within the range of normal and sideways again, waiting for Columbus, waiting for the election. What's it gonna give us? So keep your risk measured and your powder dry. And we will see you tomorrow.